initially I was on like 12 to 16 hours a day.
You allocated more than 300 ETH. So what led you to have that level of conviction?
I kind of just close my eyes and buy things. I just hope number go up, I guess. That's my goal.
Welcome everyone to the Block's Research Podcast. I'm your host, Larry Cermak, currently the CEO of the Block. Prior to that, I was the head of research for the first 5 years. And welcome to our first episode. Each episode, you'll be hearing from a blend of our research analysts as well as some special guests. And we have a special guest for today as well. We're going to be interviewing one of the biggest whales on FriendTech, follow up by a deep dive into data behind FriendTech's growth with our analyst, Brad. And then we're going to close out by hearing from the Block's Rebecca and John on the latest trends in market data and venture funding. So just quickly to introduce Hero, our guest. He's currently the top 10 points leader on FriendTech, and he has a 300 plus ETH portfolio. But just so we get a full picture, Hero, please just jump in quickly and introduce yourself.
Yeah, so I'm Hero. I've been in the space since 2015, I guess. And then I found CT in 2017 and 18. Not sure how I found it, but I've been there since and I've enjoyed using FriendTech and the other kind of social fi platforms out there.
Cool. So why don't we just kick off with a simple question, just for the listeners that might not be aware, which I think most of them will. What is FriendTech and how did you come across it for the first time?
Yeah, so FriendTech is a social fi platform. I came across it because I know Racer and Pancakes Bra from previous, I guess, working relationships with Anata. And basically a social fi platform where it's turned into kind of more of a farming game, but it enables you to have one-on-one conversations and unlock people's rooms with keys, more or less. So if you own their key, you get access to their room, which enables you to have one-on-one conversations with that specific person in that room. So it's pretty nice. Probably with you, Larry, you can't really connect with as many people on Twitter because you get flooded with DMs. So with me and probably some of the other folks who just have way too many Twitter DMs, it's really nice to have kind of a tight-knit group of 100 to 200 people you actively talk with in your FriendTech room.
You mentioned it's a bit of a farming game, which I think, obviously has been driving some of that activity. You're one of the top investors. You allocated more than 300 ETH. So what kind of led you to have that level of conviction? Is it more kind of the future expectation of some return from the farming, or is it more just, you want to support an early stage protocol that you actually have believe in?
That is a great question. I don't really have a good answer. So when I first signed up, it was probably week 2, or I signed up week 1, but I didn't actually fund my FriendTech account till week 2 when the points were pretty ripe, And I kind of created it just to see what it was all about. Everyone was obviously talking about it. And then I just signed up and I was like, well, what the hell am I going to do? I don't have any alpha. I'm probably the worst on-chain trader there is because I round trip literally everything. So I was like, well, let me just keep deploying more ETH on this platform. I started with like 3 ETH, then I went to 30 ETH. And kind of my niche was like, well, I have enough ETH to buy up all of these rooms. So what if I aggregate all of them so people that may not have as much ETH on the platform can kind of see what some of these rooms are talking about? Because it was kind of disappointing when you'd go to a room and you'd see like Gainsey's room was one of my favorites because you go to it and it's like pictures of him posting chicken nuggets from McDonald's and like talking about what he ate. So there was many such cases of people's rooms where it was like, God, these things aren't very good. So I wanted to aggregate all of them so people could kind of see what they are and make their own educated decisions on who they should probably buy and who's active and connect with. And then it kind of came growing for there.
Are the rumors right that CL only says meow in his room, or is that not correct?
I would say it's probably 95% meow or meow and El Meow. He has some pretty cool art as well from you that he does post as well.
And if you were to just think about kind of like what do you think made the platform so successful early on? So like Racer, who both of us know, he's had a few projects before, none of them really caught on as much as this one. So is it just like him learning from how to properly incentivize users on CT. Like, where do you think a lot of that activity came from? And is it largely speculators, or is it just people like actually interested in the platform itself?
So I think it came at a pretty interesting time, and it's actually kind of evolved over the past 8 or 9 weeks. So and this is just my opinion. I was just super, super bored with everything in the market, and have been for the past several months. And this kind of launched when everyone else was kind of bored. It was just like just pure crab, not up or down, just nothing else to do. And then you see more and more folks starting to talk about it. And then I think it was really good that they kind of limited the invite code. So it kind of seemed like if you're getting on that platform, you were using up an invite code, and it wasn't just everyone can sign up and get going right away. So when you start to see tons of big people like Kobe, etc., sign up, and you just kind of get interested, right? And I think that's what a lot of people did. So initially when I signed up, I wasn't really concerned about the farm or a potential airdrop. But then as soon as Paradigm got involved and announced, that's when we saw like a next big boom, because we could probably assume that there probably is going to be a token associated with it. And I joke with people and I say it's probably, instead of tokens, it's just going to be a GIF or an emoji pack for the platform with your points. But that's what started to get people more excited. So initially, I think it started out just more social. It was really cool to hop in these rooms and see, just connect with people you normally couldn't connect with, right? Because they can talk to you if they have about 100 to 200 active holders. And in the past few weeks, it's turned into more of a farming game. So a lot of these kind of early, I guess, C2 influencers, you could call them, joined, and now they kind of have died off the platform, and it's now heavily weighed on people that are coming over from like blur farming and just depositing. Like I'm a minnow compared to some of these guys depositing 600 plus ETH into the platform and sibling with multiple accounts. So
Yeah, I definitely see some of the similarities with Blur airdrop farming as well. So are you worried yourself that like the activity just kind of like goes away afterwards after this is said and done? Or is that just a natural progression of kind of the incentive scheme that's lined up this way?
yeah, I don't know. I think the team has like what 4 or 5 months to really kind of take it to the next level. And I do know that they are actively focusing on taking this outside of just a crypto app. Because if I'm a normie and someone signs up that's a celebrity that I want to connect with, for example, and I can't buy them because they're bought it up to 5 or 6 ETH, and I don't even know what ETH is, then I see all these other random cartoon characters that I have no idea who they are, and I'm not going to just buy them. So I think in order for it to be success, they need to bridge that gap between what non-crypto native people would like to see and what crypto native people would like to see. But I do see a lot of opportunity with like the halving coming up next year, and just the cycles, if it does pan out like the previous cycles, to where if there is a token drop, it could come at a really, really great time. And I think to keep the activity going, it'd be interesting if they did introduce seasons. Some things I think they would probably do is maybe use that huge treasury that they've accumulated from high fees to do kind of like a MoonPay onboarding experience where they bring like big celebrities and their audiences over. So if you think like Kick bringing over Twitch users and signing them up,
Right.
to then have them bring their entire audience over. So I think that could be potential. And if I guess try to summarize all that, it would be making it more accessible for mainstream people, rewarding creators maybe with more, I guess, financial incentive, whether it's for a RefLink commission, which I think has been talked about, or just paying them out with the treasury like a MoonPay experience, to basically incentivize people to want to keep building and growing. And that's what would be really cool. I'd love to see it be not necessarily any crypto folks at the top of a leaderboard, but real actual people that people want to connect with and get utility from.
And how do you think the value of each kind of holder or each of the key, how do you think that has been determined so far? Is it just kind of proxy of reputation, or is it more just like, hey, I really like this person, so I'll just invest and hope that that price goes up? Is it a mix of those two? Like, do you have any idea kind of why the people at the top of the leaderboard are at the top of the leaderboard?
I think it's evolved. So I think initially it had to do off of price speculation, but also like when I first did it, I wanted to buy a few people's keys because I knew I probably normally wouldn't have a chance to meet them or talk with them unless I had this. So like Matt Hoang and like Arthur, uh, Zusu, etc., like Kobe. It's kind of cool to be able to have that opportunity to kind of get in front of them. So that's why I initially bought them. And then with the assumptions that, hey, they probably will continue to do good if they enjoy the app and wanted to remain active. And that was kind of the initial. And now I think all of the top is heavily focused on, for better or for worse, it's basically farming. So it's taking that social fi aspect out of it, and it's basically like a points competition. So we assume that each point is going to be worth X amount of dollars depending on what the amount of tokens is released, if there even is a token, and what that fully diluted valuation will be. But yeah, I think it's just evolved. So now the top is basically farming. So and there is different utility, right? Like the CBB OFE came over and he's one of the top blur farmers, and he's introduced some really cool utility to basically do a token and side accounts that give people APY based on what FriendTech keys they hold. So I think some of the top rooms either have a lot of capital, like Vombatis, who's just kind of just a meme, but deploying hundreds and hundreds of ETH, if not thousands of ETH from the self-buy strat, or they're just actively farming or have some pretty awesome utility.
And for the listeners that maybe are not familiar with the point concept, like, can you just explain how those are allocated? Is it fairly random each week? Is there, there's a lot of speculation around how it is being distributed. So can you talk a little bit about that?
Yeah, so it's pretty consistent. So my favorite, I guess, key or follow for this, there's a few. There's Makesy, Exponent Crisis, and then Luke Martin also puts up some pretty good data, and then Bread. But it's heavily weighted towards portfolio value. So I think last week's points, for example, 0.80 of the weight was portfolio value. So if you have one ETH in portfolio value, you're going to get less points most likely, even if you're active 24 hours a day, than someone who has 10 ETH of a portfolio value. And then it goes down to things like holder count, how many keys you're actually holding, last message time, your share of supply, the last online time, fees collected, and then how many people have added you to a watch list. But 0.80 and then the next one drops off to 0.08 and 0.06 of the weight is based on port value. So that's why we're seeing a lot of people deploy quite a bit of capital who want to catch up. And they had nerfed what was called, I guess, self farming, where you would just buy 300 of your own key and just farm max points that way. Because each key you buy of your own, so like Vombatis, for example, his port value is insane because he owns 300-ish keys valued at 8 ETH plus. So multiply that, and he would just get a huge share of the points. So they recently had nerfed that. But yeah, so for new people coming in, it's easier for sure to get points if you have more capital to kind of deploy into it. But I guess it just depends on your conviction of how much you think a point is going to be worth, if it is even going to be worth anything, which I think we feel pretty confident that there will be a token associated with it, but unsure.
There's been a few kind of criticisms of FriendTech. I think one of the more prominent ones is the bonding curve and how that doesn't really get sustainable at higher numbers. It takes fairly low amount of capital to actually drive the price of a key higher, and then it becomes less accessible, to normies, like you mentioned before. Is that something you think actually needs to be fixed before, normal users are onboarded and kind of gets used by hundreds of thousands of people instead of what it is now?
So I'm probably not the right person to ask that question to, because I have no idea. Again, that's where I say I'm kind of retarded. I don't really understand. I kind of just close my eyes and buy things. I do think if it's related to having people in a room, it's probably a good thing, because if you end up allowing 1,000+ people in a room with a key, it's kind of hard to have those conversations. It's basically just like taking it back to like Twitter DMs. It's like, well, I can't get back to all 1,000 of these people that own my key. So I think the rooms kind of will cap out at maybe 250, 300 actual users, which is where the, I guess, bonding curve can be effective. But uh, yeah, I'm not the brightest person to ask that question to give you a techie opinion, unfortunately. I just hope number go up, I guess. That's my goal.
And so, with that in mind, have you thought about any sort of exit strategy? Is it just accumulating as much as you can of the points until there's an airdrop and then selling some of that? Or is it more, a fun game for you? You're not really looking for a crazy return?
Yeah, that's interesting. So, I guess not my exit strategy, but an exit strategy I think we'll see is people probably de-risking and selling keys ahead of the airdrop. So some big brains will probably be able to math out and understand, well, I could farm for an extra 3 weeks or 2 weeks, but it's not as valuable as the ETH amount I could receive now for those points that I would receive. So I think we'll see people de-risk as it gets closer to the airdrop. But it also depends, right? It depends on how they do that airdrop. It depends on what the tokens are worth. Maybe it's a phased airdrop, so we're not going to see people de-risk. So there's a lot of unknowns. For me, I kind of just continue to keep adding ETH to the platform. Um, for better or for worse, I'm not sure. The more participants, obviously, the less yield. So I'm just trying to maintain and keep a high amount of points because I am sharing my airdrop with anyone that holds my keys. So my commitment to them is, hey, I'm going to try to grind out and get as much points as possible. I'm not going to be able to pull a CBB or a Wombat or a Levi and put 500, 600 ETH in here, but between a couple accounts, yeah, I'll do 300 and try to maintain that. So not really an exit strategy, but again, I'll pivot as the team announces what they're kind of doing. And they can't really announce it, right? Because they want to do things as legal as possible. So yeah, I don't want to just sell everyone off and nuke them to zero, but I will probably sell quite a bit of keys off.
If you were to pick one group of people to onboard to kind of make normies more interested, once there's better infrastructure and the app is slightly more thought out for normies, would it be actors? Would it be basketball players? Do you have a group in mind that you think can kind of jumpstart a larger wave of interest?
I don't know. I think it needs to be everybody. So one of my favorite things about FriendTech early on was that it gives you a chance to meet someone that you normally don't get a chance to kind of converse with. So if they're giving you the time of day, now on the back end, they might have like an assistant that just does all this for them and you don't really know. But it would be kind of cool if they gave you like some concert tickets or backstage passes or things like that if you're a key holder. So I think literally everyone could fit into the niche of people getting onboarded, but I do think that they're focusing on maybe musicians next. It kind of looks like, and I know Pancakes has a big background with musicians. I think they onboarded Daily Loud, that the Twitter account Daily Loud, who also has a big background with musicians, and they have a lot of connections with musicians. So I could see that being like a next putt, but I think literally everyone, if they can get the discoverability features live, because if I'm a kind of brand new FriendTech account, I don't have any following, no backing, and I just hop on the account, I'm going to have probably 5 bots buy my keys, and then unless I deploy capital, what am I going to do on this app, So they need to kind of fix like that discoverability piece so that people can find each other without having just to shield their key and to try to get noticed, right? Because that's kind of annoying and disheartening. But discoverability and I think any vertical with that. So sports players, musicians, actors, artists, you name it.
In crypto, there has been basically no example ever of someone creating a new market for something and then a competitor taking over. We've seen so many attempts over the last 5 years. There's been countless of attempts of any new trend. There's always a second follower and a third follower, and none of them have ever succeeded. And we're seeing really a similar trend with FriendTech. Do you think personally there's any risk that someone just figures it out better, but maybe has a better UI UX, better pricing mechanism, and just takes over FriendTech, or is it just going to follow the same trend as always before, and it's always going to be the first?
Yeah, I don't know. I think FriendTech is the one to follow. So I mean, there's what tons of forks, but I think it's just a loop. So FriendTech being at the biggest loop, and then the other ones kind of just going down the loop until it gets smaller and smaller. What I'm seeing is what for better or for worse, I see a lot of people signing up for the new ones and they get the fees and then they send it back to FriendTech basically, right? Um, or maybe they didn't do so great on FriendTech and then they're building up their following on the new platforms. So it's kind of hard to not sign up. Like I signed up for one the other day called Tomo just because it said I had like $2,500 waiting for me just to sign up for people. So I was like, yeah, I'm going to sign up, but am I going to actively load capital into it? Uh, I don't know. I don't want to do this twice on a few different apps, but and I think that's where a lot of people will be like, it's like I've already invested a decent amount of ETH into one platform that I trust, and I think trust is a big thing too. A lot of these you don't know, but where I do feel like I trust Ricer and Pancakes to do right. I don't think I'd trust the same amount of capital in one of the clones or copycats, although some of them are actually pretty fun to do, and some of them may be able to take some of the TVL from FriendTech. I think the main bread and butter, I guess, is FriendTech, and the other ones are fun loops for now.
If you were to convince someone like myself who doesn't have a FriendTech account yet, why join? What's your quick pitch?
I don't know. It just depends on how, like, if you have the desire to do it. I'm sure you're pretty busy, right? Like, do you want to add one more thing to your plate or not? So, if you're, again, I joined it because I was bored and there was nothing else to do. You seem not, you seem very successful. You seem like you have a lot going on. You seem like you're probably not bored. So, I, I I would say if you wanted
I'm
to
not.
maybe get more one-on-one time with your biggest fans, that's where it's kind of cool. Because I mean, you're Larry, right? A lot of people love Larry, and they'd probably want to get in touch with Larry and probably speculate on your price and everything too. Um, but I would join to see who your super fans are if you wanted to, and then be able to kind of get on that ground level with them. Um, but I don't know if you have the bandwidth or even care to do that.
Yeah, one of my issues is one time commitment to your point, where I don't want to start something where I'm not going to be spending a lot of time on because then it feels like you're just kind of taking advantage of your super fans. And the second is exactly that, is that like it kind of, to me it seems like a lot of people start an account and then don't really utilize it much, and then it almost looks like you're just kind of like making money from your friends trying to follow you, trying to talk to you, and you're not like super available. So those are the reasons why I haven't done it yet. But yeah, probably something I'll consider in the future. But one last question for you. We're going to be talking about data after this segment. So is there any data that you're watching yourself in the next couple of months as you're evaluating if you should put in more capital, less capital, exit strategies? Is there anything you're watching?
Not really. Like I said, I kind of just close my eyes and market buy. So even if TVL, like let's say it's at 44 million right now, according to DeFi Llama, even if TVL tanked to 30 million, like I'm not going to sell what I have. And that's one thing for I guess being in the space for a while. It's like I'd rather lose 300 ETH and just watch it go to zero than sell it at 30 million or 20 million TVL, right? Like I'm not that worried about it. I have enough conviction into the end game with it that I'm going to hold on and keep it. So I don't really watch it and don't really pay attention. I think my biggest thing is I want to make sure that the people who trust me and have bought my FriendTech key feel like they're taken care of. And I want to make sure that I'm doing the best I can to do that, right? So initially I was on like 12 to 16 hours a day because I was manually aggregating every single room with screenshots. And now I have a bot that automatically aggregates all of it, thankfully, because my hands were getting carpal tunnel and it just was not it was not scalable. So I think so long as I am active in responding to people, that's all I really am concerned about. As far as FriendTech as a whole, um, would I be a little concerned if it dipped under 30 million TVL? Maybe. If they got hacked, definitely, because that's just like there's a lot of information there probably that would be worrisome. Um, But yeah, if I really wanted to dive into it, I would just look at the DeFi Llama dashboard and see, oh, here's the inflow, here's the new users, but honestly, it's I'm not really too concerned. I'm just going to stay here till the end of farming, and then if they continue to build on it and make it something fun to use instead of just a farming game, then I'll continue to stay.
Cool. Well, Hero, it was a pleasure having you on. Thank you very much for your time, and hope to talk to you at some point again on a podcast.
Cool. Thanks so much, Larry, for having me, man.
Thanks a lot. Okay, cool. So next up, we're going to be hearing from our analyst, Brad, to take a closer look at the data behind FriendTech's impressive growth. So first, quickly, Brad, can you just introduce yourself, and then we're going to hop into some of the questions.
Yeah, thank you so much, Larry. Happy to be here. Hope everyone has had a great day so far. My name's Brad Kay. I'm a research analyst here at The Block. I mostly cover NFTs and gaming. Yeah, thank you for the introduction, Larry.
Absolutely. So why don't we just start really simple? Can you just explain what the concept of a key is and how they're used on FriendTech?
Yeah, so FriendTech is a platform that launched on Base about 2 months ago. It allows users to buy and sell their keys that are linked to Twitter accounts. So these keys offer access to private in-app chat rooms and like exclusive content from the X user, whatever kind of they choose to send to their shareholders. It's kind of like a marketplace for your friends, and the keys act as the tradable asset where you can gain access.
And so what data are we looking at right now?
So to start off, we're gonna kind of size up the market, look at like the users and trading volume. That's kind of like the two high level metrics. So you can see that FriendTech has witnessed over 300,000 unique users, and on an average day, they're gaining between 5,000 to 10,000 new users. Yeah, these people are really active. They facilitated trades amounting between $5 to $10 million daily, which is that right side chart, and over $400 million total. So, I mean, it's a big market, still going up and pretty active.
And what do you think are some of these spikes that we see on the chart itself? Is it just, I think the first one was when they announced that Paradigm invested and there would be probably some airdrop. But is that, is it always like there's always a spike if there's some speculation, or what do you think is driving this?
I think that there's just a lot of new people, new big faces joining, and a lot of those spikes can coincide with those new faces joining. That'll bring in a lot of volume, and also there's points airdrops every about week and a half. So if you do look on that left side chart, you like every week, 2 weeks, you could see kind of that like a day or two rise of users and volume, which kind of coincides with those point drops.
Cool. So why don't we just go and kind of compare some of the fees generated by FriendTech to other platforms as well that we see in crypto? Is there, does it compare well compared to other platforms? Do you think it's going to get better in the future? Do you think it's kind of stagnating here? What's your thought?
Man, honestly, the fees are it's crazy to see. They take a 10% cut on every transaction. So 5% goes to the creator, 5% is going back to the platform. And you could see in that middle chart, there's been $40 million total in fees generated and split in half between the protocol and the subject. So I mean, this is amazing. Like out of all blockchain networks that are kind of tracked on DeFi Llama, which is that left-hand table, you could see in the past month, FriendTech ranks number 2 in fees collected at $30 million, only behind Lido. So, I mean, it's a huge market, like growing every day. You could see there's about like 45-50 million dollars in total value locked. So, yeah. I mean,
the only thing I would mention though, this seems a little familiar with how Luxor has done it as well, where they specifically incentivize activity with the exchange of some like future exchange for tokens or some future promise of something that will happen in the future. This seems a little familiar. Like, how do you think? How sustainable do you think this is? Because with Luxor, once they stop being as profitable in terms of the farmers, the activity kind of dropped off pretty badly. Do you think that will happen here as well?
That's a really good point, and I kind of look back to what happened with Blur and kind of the season one and ongoing season two airdrop. You incentivize a whole big base of users to trade something, and if they're happy with the incentivization, usually in the form of an airdrop, then it I don't really see I haven't seen this playbook really work well in the past. Um, it's going to be interesting to see if FriendTech stays with this 10% fee, because if you do see if the value locked and the trading activities goes down, then a lot of people are going to be complaining about these fees, as opposed to when it's going up, you're not as worried about it. So yeah, I think that when those airdrops kind of do hit, it should have a little pullback.
Cool. Why don't we go a little bit into the pricing mechanism? So I talked to Hero about this a bit, and he didn't have a lot of thoughts about this. But can you explain kind of what a bonding curve is, and why do you think FriendTech uses a bonding curve, especially the exponential one that we see here? And then not only that, but if you can also kind of speculate what are the benefits and disadvantages of using a pricing mechanism like this, that would be super helpful.
Yeah. So, um, if you look at that chart, so the pricing of the keys follows an exponential curve. So it starts off pretty flat, and it increases further as you increase the number of shares. So, um, I think that it's kind of imperative to understand how these key prices can spike dramatically with increased demand, and it really does impacts like the trading and profitability strategies, which you could see on this slide right here. So, for example, the top key price right now is Vombatis at about 9.05 ETH. So, um, combined with that 10% fee, making like a profit is kind of a puzzle in with FriendTech. So, because if you do buy that key right now, you would need an additional 415 ETH to flow into that key in order to be able to sell at a profit. So, which is 22 buys. Because so it's a very aggressive curve, and it does bootstrap early users that kind of get into that left side of the curve as you because it does increase exponentially. So yeah, I think that it's very interesting because it opens up a whole kind of new area for trading activity for bots. So I yeah, so I think that once you kind of incorporate bots into the equation, it gets a little messy, because if a big account does join, um, it's the bots usually kind of eat up all the initial profit. So that equation right there is showing when the numbers of keys is less than nine, it's almost guaranteed you're going to get a profit. So that's why there has been a lot of mad bots that are kind of eating up a lot of these profits.
But FriendTech's ambition long term is kind of to onboard as many people as possible, right? It's like it's supposed to be the most kind of retail facing app there is, because it is available to everyone, and you can speculate on everyone's success and all of that. But isn't the issue that if someone super popular joins, probably order of magnitude more popular than someone like Kobe, who's currently leading the leaderboards, isn't the issue that it just gets botted up until the kind of profitable point, and then at that point it's like it's too expensive for normal people, and then it's like ridiculous to even expect profit. So you're kind of like, almost the way I see it, you're like, unless the bonding curve changes or the fee percentage change, you're incentivizing kind of like rich kids to buy the right to talk to someone, and that's probably going to be their PR manager. So do you think that's true, that like things will have to change for that to happen?
Yeah, Larry, that's a good point. On the left-hand chart, we're gonna look at that on-chain trading retention. So you can see that there's an 11% rate for that first cohort, which is far higher than the later cohorts at 3%. So you could see on-chain that there's good retention from like earlier users, but it's much lower than what you're gonna see in that right-hand table, which is gonna show the chat retention. So yeah, it's really hard to have passive engagement in this app because of the pricing curve along with the 10% tax. So the chat retention is really good though. They released a report that it's sitting at 67%, which is much higher than like traditional social media based apps.
Do you think that will last? Like, is it just a sticky app, or is it people airdrop hunting?
I think it's a little bit of both. So, like, you do get those airdrop hunters, and then you also get the people that are that see people like Steve Aoki or Grayson Allen joining, and they want to get in on that little dopamine rush of speculation. So, I think it definitely is a little bit of both, as you'll likely see with a lot of these protocols that do incentivize users to transact.
How much of the success do you think, FriendTech had, especially in their early days, which jump-started a lot of that activity? How much of that do you think is connected with the base launch and like so much hype around that as well? In other words, like would it be as successful if it launched on Polygon or if it launched on something else? What do you think?
You could see like 20 to 25% of the users and transactions on Base are from FriendTech. I think it's like hard to replicate the success of Base that they had on Base only because um, it's the ease of onboarding. So like Base is obviously a Coinbase sponsored or a Coinbase layer two network. It was very easy. I mean, for me, when I joined, it was literally I had Coinbase. I went from Coinbase straight straight to the Base like network, and it was a very easy onboarding process. Like so, I don't know. I think that a lot of it had to do with just like Base launching at that same exact time too. It was just like a really hype thing. Um, yeah, I mean, and you do see you're seeing a lot of these clones on other apps or on other blockchains too. So yeah, the next chart that like I was gonna talk about is like just the user comparison. Like you could see there's Solana, Avalanche, Binance Smart Chain, like all of them have launched competitors like just straight forks, and none of them have kind of matched the success of Base of FriendTech due to that like first mover advantage.
Cool. Well, appreciate the conversation, Brad. It was great to have you on and hope to have you on at some point again.
Yeah, thank you so much, Larry. Happy to be here.
Thanks. All right, so now we're going to be talking to Rebecca, a research analyst that focuses on data, and we're going to be talking about some trends that have been shaping the broader crypto market. So, Rebecca, the first question for you is, we've kind of seen both DEX volumes as well as on-chain volumes falling off quite a lot compared to where they were before for the past 2 years. Can you talk a little bit about why that is?
Yeah, I'd say so. Like on the chart on the left, you can see that DEX volumes for September came in just over $32 billion, which is the lowest they've been since December 2020. And then similar for just like on-chain transfer volumes on Bitcoin and Ethereum. They've been hovering around like 2 billion on Ethereum and 20 billion on Bitcoin, which is also like comparable to levels at the end of 2020. So we've really seen like a reversal of a lot of the bull market sentiment of like 2020, 2021 and 2022. And I mean, it kind of makes sense given all of the fallouts that we've seen in 2022 between like Terra Luna, Three Arrows, Celsius, and then especially FTX. Like crypto sentiment is just like not exactly where it was before. So it's not surprising that we'd see the volumes fall back off like we have right now.
Yeah, it makes sense. And we're really seeing like similar trends across the board, especially when you look at, spot volumes or even derivatives volumes, liquidity as at near, kind of 2-3 year lows. Can you kind of talk about some factors that also contributed to that?
Yeah. So spot volumes also saw a fall off similar to on-chain volumes. Like volumes for September were just under 312 billion across spot exchanges, which is the lowest they've been since October 2020. So you're seeing similar pressures that were faced like by the on-chain volumes, but also just like broader macro sentiment has been pretty not great in 2023, just like with inflation running rampant, like how are certain countries adjusting in a post-pandemic world? like a lot of like bipartisan politics, especially in the United States. So again, like on like the spot side, it's not surprising we'd see volumes there also fall off just given conditions.
That makes sense. And, when talking about spot exchanges, we can't really not mention Binance, which has historically really dominated volumes. And it's been maybe the biggest topic of the entire crypto universe over the last few months. A lot of speculation around some sort of a, DOJ settlement, a lot of issues being brought up. Can you talk a little bit about Binance's market share and how that's been impacted over the last few months?
Yeah, so Binance's market share has definitely taken a tumble this year. Back in February, they had about like almost 64% of the spot market share. And then back in September, they just like barely had about 40%. And it's like they have like a kind of narrative that you would believe that they have a declining spot market share just due to regulatory pressures post FTX. Like they were sued by both the Securities and Exchange Commission and the Commodities Futures Trading Commission in the United States. But like other examples are like them deregistering in the United Kingdom, withdrawing applications to be licensed in Austria and Germany, and also just like exiting the Netherlands. And also like not that long ago, they had to stop operations in Belgium after like the regulator ordered them to stop, but they were able to go back in after about 3 months using like their Polish arm for like compliance. And they've also just like lost partners like PaySafe and Checkout.com due to people citing like regulatory pressures. And they've also faced many executive departures, which all kind of play into a narrative of declining market share. But like, that's like hard to just point to just one example of like why they're declining, because Coinbase was also sued by the SEC and their like market share has been fine. And they've also like, Binance has been expanding. They became like the first fully licensed crypto exchange in El Salvador. They re-entered the Japanese market with Binance Japan, and they've also obtained licensing in Dubai. So I wouldn't necessarily point to just the pressures as their declining market share. I would actually say the main driver is the fact that in March, they reinstated fees on Bitcoin pairs, which they had previously removed in July. And you can see on the chart just like how they started growing their market share in July when they first started this zero fee Bitcoin promotion. And then how when they reinstated it in March, their market share just kind of fell off.
That makes sense. And can you talk a little bit about the fee promotion itself? Like, what did that mean? Was it basically just not paying any fees at all for certain markets and then kind of inflated volumes? So why would people do that? Just because it's the cheapest market out there?
Yeah. So Binance launched this promotion back in July as part of their 5th year anniversary. And basically what the promotion entailed was that it was 13 Bitcoin trading pairs, and they were basically all into stable coins and fiat. They made them fee free. So it was like free to trade those pairs, which was pretty lucrative. Probably like not a lot of exchanges had that same competitive advantage. Binance was already super liquid. And then this just like encouraged more trading on their like very liquid markets. For instance, like the Bitcoin USDT pair on Binance, which like was their highest volume pair before, became like even more voluminous. Like before it was probably putting up like around $2 billion a day. And then after the promotion started, like it would sometimes reach $10 billion a day in daily volume. And so it just like was drawing a lot of attention. As you can see from the previous slide in the chart, like their market share just exploded. And then they ended the promotion in March, but they did leave a handful of tokens fee free, or a handful of pairs fee free. Initially, it was just Bitcoin into TUSD. And then they changed it to be Bitcoin into First Digital USD. But you can see on the chart on the left that after the promotion was like put back, after the promotion ended and fees were put back on the pairs, Bitcoin USDT volumes fell off to like oftentimes not even reaching $1 billion a day. So putting the promotion back, ending the promotion put a lot of pressure on their volumes. But then you see in the pairs where they didn't put the fees back on, that the volumes were not reaching levels that Bitcoin USDT had reached. For instance, the Bitcoin TUSD pair that was fee free only like was reaching like maybe $2 billion, like almost like $4 billion a day on good days. So it was just like not putting up the same volumes.
And so initially it was kind of obvious why Binance was doing this, right? Initially it was to just get more interest for BUSD, where they had some fee split, and therefore that was generating revenue for them, the more people that actually had BUSD. Why do you think that was the case with TUSD as well and FDUSD, which like effectively no one has heard of before Binance actually listed it? Is it like fair to speculate that there's also some fee split that Binance is getting from those in order to kind of, and that's why they're incentivizing it, or why are they just doing this for these kind of like obscure, not really popular stablecoins?
Yeah, I think it's like fair. So obviously BUSD, but it cannot be issued anymore after like Paxos had to stop minting it from an order from the New York Department of Financial Services. And so like Binance has been on the market for looking for a new stablecoin for them to favor. And BUSD was obviously very favorable for them since they were like partially in charge of it. But like you're not going to get like with USDT or USDC like a lot of Binance dominance. So for these like smaller known, like smaller, lesser known stablecoins, like it's more likely that Binance can have more influence there, which is probably why you see them trying to promote these like True USD and First Digital USD as like new trading stablecoins for them.
Cool. Yeah, that makes sense. So about Binance US, why don't we just flip to that? Is there a similar trend to what Binance is seeing? I'm guessing it's probably even more aggressive, given that there's been even more regulatory uncertainty around that exchange, also fiat withdrawal stopping and all of that. Can you speak about Binance US a bit?
Yeah, basically what you said is exactly true for Binance US. They were also sued by the SEC in June, along with the lawsuit for Binance. And basically their volumes, actually like right after the lawsuit, were not so bad, but because of the regulatory pressure on the exchange, their banking partners pulled out, which did force them to stop USD withdrawals and deposits and also delist all their USD pairs. And that's like a huge deal for a US based exchange because now like your customers can't really convert from fiat. And their volumes have not even been hitting $1 billion since that went into effect. But previously, like back in March, they had like $17 billion in volume. So it's a pretty significant hit for them. But it's also just like not surprising that we'd see volumes fall off when you're facing pressures like that.
So we've also seen the launch of Ethereum futures for ETF, just like we saw with Bitcoin, a year and a half ago or so. Obviously, with Bitcoin, this was top of the bull market, and there was a lot of volume for that ETF at the time, a lot of hype. With the Ethereum ETF, it was very underwhelming, I would say, in terms of volume. And so can you speculate a bit about, why we are seeing such a different trend? Is it just lack of demand for ETH overall? Is it just the environment? What do you think are the biggest factors?
Yeah, so like earlier this month, we saw Bitwise, ProShares, and VanEck all launch Ether futures ETFs, but they were not really launched with much fanfare. Like across all three, they like have been struggling to reach $1 million in volume. Whereas like for comparison, BITO, which is ProShares' Bitcoin futures ETF, that usually does like $500 million a day in volume, or $50 million a day in volume, regardless. So we haven't been seeing a lot of demand. And also the day that BITO launched, it did $1 billion in volume for comparison. But BITO launched in October 2021, which was like peak bull market. So there's a lot of demand for a Bitcoin futures ETF. Whereas like right now, a lot of like the topics that we talked about earlier, like the inflation, like global risks are really weighing on investors. So it's not surprising that we'd see their volumes not really take off. But it is worth noting that BITO's highest day of volume was launch day. And we've already seen that like ProShares' ETH ETF has already like shown days where volume has grown as opposed to like launch day. So it does seem like there's a lot of room for them to grow in the future, like when sentiment just gets better. But we're not really seeing that yet.
Cool. Well, Rebecca, thanks a lot for joining and giving us these insightful points. And we'll look forward to having you on again.
Cool. Thank you for having me.
Thanks. So to close out today's episode, we're going to be hearing from the research director, Dantoni. who's going to be talking about some of the funding trends. So welcome, Dantoni.
Happy to be here, man.
Why don't we just kick off like really high level? How has the funding trends looked like over the last quarter compared to really the previous, last 2 years or so?
Yeah, so when we're looking at it from a time frame, say the past 2 years, it did not look that great relative to that time period. So venture funding in Q3 was just over $2 billion. So when we compare that to Q2, it was down about 38%. And then when we look at deal activity, it was also down by about 25%. And the 414 deals that last quarter was the fewest we've seen since Q1 in 2021. And then when we look at it from the funding perspective, it seems even a little more bare in the sense that it was the lowest amount we've received in the sector since Q4 2020, which was right before we saw the massive explosion in investment in 2021.
And do you think this could generally be kind of a good sign? Like if we look at the last bear market, right? Like I'm sure we saw a similar trend where like kind of the old capital is kind of washed away and only really the resilient VCs actually survive and continue making investments. Like, is there any indication that that could be happening now as well, or do you think there's more pain to come in terms of funding?
Yeah, so I think it's actually interesting that you asked if there's more pain to come, because when we look at it in the past 2 months, actually, those were the lowest amounts received in this past year. So in August, we saw about 498 million, and then in September, it did rebound to about 676 million. To not get super involved in it, I don't think we'll necessarily see funding get drastically worse than we've seen. I think the lows could potentially be in, and there's other factors. For example, at the 498 million, we've seen historically seasonality in terms of investment. So I believe it's been like at least 3 quarters straight where investment in August was down compared in the previous month. So. And I do think that it is similar to, like you said, in terms of where, it's just crypto's been prone to these boom bust type cycles where, there's tons of investment. And when we really scale out, investment is still significantly up compared to the past years. Obviously not at the height of the bull market, though.
And when you look at like the current deal composition, so even though we're seeing less deals, I'm guessing it's not a lot of like large, Series A investments or anything like that. I'm guessing it's a bunch of smaller ones. So is that what we're seeing from the data as well?
Yeah, so that the most notable in terms of when we look at the data and funding themes, the most noticeable thing is there's just been a major slide in mid-stage financing and later stage financing. So in the height of the bull market, we really started to see like tons of these, Series B rounds and later stage deals that just we never had really seen in the crypto sector. And I think that there's a lot. Were a few, reasons for this, but one major ones was you were seeing like some of these newer investors like the Tiger Globals come into the market, and that's the type of investments they wanted to make, and it was the crazy valuations, high amount of deals, and we just haven't seen that. So at mid-stage deal activity, it's projected to be about down 71% year over year. And when we look at it from a quarter perspective, it was down 63%. And in terms of later stage financing, it's pretty much the same thing. It's expected to fall about 66% year over year. And then just another quick note on it is, so when we look at those high totals, when we look at, I believe it was about 33 billion in all of 2022 in aggregate, a large contributor for these large numbers that would make the headlines was the mid and late stage deals. So when we look at it, these two stages are in aggregate going to raise about 1.7 billion in 2023, which is compared to about 10 billion in 2022. So you can just see that large amount of difference just right there from those two deal stages.
That makes sense. So I remember, kind of like maybe like 3 years ago, the DeFi boom, right? And after that, we saw an absolute massive increase in DeFi financing overall, and just like teams raising a lot of money for DeFi projects. And I think we saw the similar trend with GameFi afterwards, where like Axie Infinity exploded, and then you saw a bunch of games raising money, a bunch of NFT projects as well. Do Do you generally see from data that VCs are chasing the trends, or do you also see that there's also sometimes kind of an uptick of something and only then it becomes a trend? What have you seen from the data historically?
Yeah, so historically, I mean, in terms of trends, I mean, sometimes you see a little of both, right? So I remember in the past with NFTs and gaming, you started to see a little of an uptick with some investors where it was starting to, formulate, but then at the same time, it completely went, it just went exploded, and then you see like much more opportunist investing. Another example would be like in terms of down market conditions, we've often seen like infrastructure and crypto financial services being, kind of like these safe havens for investment, and that is typically what we have seen in the past in terms of in these bear market conditions.
And when you look at just in general, like categories of investments, what are we seeing that's the most invested in right now? I'm guessing it's infrastructure, like every bear market, but is that right?
Yeah. So, like I said, infrastructure and crypto financial services, they've historically shown strength in the down market environment, and this is mainly, I would say, like a lot of times in these bull markets and the euphoria, the kind of market gets tested, and then you start to seek these pain points and potentially what certain types of infrastructure that's still needed for the sector, and that's where I think a lot of investment where it can be kind of seen as less risky of a play. And for example, crypto financial services, it was the only subsector that didn't decrease in deals, and it was only one of the two that had an increase in investment. Infrastructure, which has typically fared very well, it actually relatively had a poor quarter, but the main thing, because it did have the largest percent decline in deals, and also the largest it dropped about 70% in investment. But before this drop off, it was showing a huge amount of interest. And one thing that we saw from infrastructure that was surprising, and you didn't see with any other category, was that during when you compared recent investment compared to the height of the bull market, there were instances where infrastructure deals were actually outpacing the deals that were occurring, during the height of, the frenzy.
You would almost assume that in a market like this, there's going to be a bunch of consolidation, right? Because a lot of projects are probably running out of cash, trying to raise, valuations have compressed a lot. Have we seen an uptick in M&A activity, or do you think that's still kind of coming in the next, maybe a couple of quarters? Like it would seem almost intuitive that there would be some more consolidation as there are more opportunistic plays, kind of maybe in distressed states.
Yeah, so the M&A market of recent has really actually kind of surprised me compared to what we saw, say, in 2018 to 2020 during those down markets, because you saw a massive uptick in mergers and acquisitions. And as this funding was going down, that's what I would highlight in our recaps. And I had expected us to see that explosion in M&A activity, but so far that really hasn't been the case, and it's actually been fairly dry. For example, last quarter there was about 35 M&A transactions and 875 million to purchase crypto-related businesses, at least the amounts that were publicly known. And so M&A transactions were down about 35% Q over Q, and it's fallen for a second straight quarter. And it was actually the lowest amount of transactions similar to funding since Q4 20. I do think we're still going to see this consolidation because you need to see this uptick. And as for like an explanation for why this is kind of developed in this way, I think what we've really saw was we're seeing companies kind of just cut back and be more conservative. We were seeing a lot of those layoffs and whatnot during, let's say over the past year or so. And I think that companies are just trying to be more, just trying to bear out the worst conditions, and rather than try to focus on expansion. But I do still think we will see it in some way, because it kind of has to happen.
Yeah, that makes sense. So I have one last question for you. So if you were to put your prediction hat on, and you're kind of thinking about, looking at the data, which you do on a daily basis, what are some of the takeaways that you would have of what, you think that listeners should expect in the next couple of quarters based on what you're seeing from the data?
Yeah, so the main takeaway here is going to be no matter what, I mean, there's only one quarter left. It's nearly impossible that we're going to see numbers similar to 2022 or even 2021. So you're going to see the headlines. You're going to see, investment drops by 50%, because right now I think we're projected at 10.8 billion, and that's would be about half of what we saw in 2022. So I think the main takeaway here is just going to be, it's all about perspective. So like we're looking at, we didn't mention seed financing all too much. We did mention the mid and later stage deals. Seed financing is occurring at a very healthy rate relative to the overall market. So I think that one of the biggest takeaways. So for example, seed financing next year, or is projected this year, to be more than we saw from 2017 to 2020 combined 4 years. So, and I believe that amount is about $3.3 billion. So, and another little context to that is we saw about 3.7 billion in 2022, which there was significantly more money coming into the market then. So it just goes to show you how seed financing is leading the way there. And so, yeah, the main takeaway I would say is that there still is a lot of investment there, despite the declines that we will see in terms of the headlines. And, it's just up to the projects and the stakeholders and investors to make use of that money wisely.
Great. Well, appreciate you joining us here, Dantoni. Hopefully we'll see you in some future episodes as well.
Thank you again.
And that wraps up episode number 1 of the Block Research Podcast. Thank you all for watching, for listening, and we hope everyone has a great day, and we hope that you'll tune in for the next episode as well. Thanks a lot.